What's up, everyone? Welcome back to Money Market Truth. I am Mark, and this is.
This is Mo from OTB Clubhouse.
Hopefully, you guys had a wonderful week. I know there was a little bit of a rally, so our first topic today, we're gonna get straight into it. Is the recession over? Do you think it's over, Mo?
No, it's not over for the simple fact that we don't see this kind of rallies in a bull market. These are the typical bear market rallies. They're super violent, and that's what we've been seeing. We'd had seven straight red weeks, and then I think we tried going green one day, and basically bears took control, and we finally have the 8 week ending green. So no, the bear market is not over, and this is very typical. And if you have any kind of bias trading, you will get clapped in your portfolio. It's very
Yeah,
easy to lose money.
yeah. The bias is definitely a huge part on the trading side, especially if you're trading. For example, the past couple of days, it was very clear that the market was just going up and up and up, and I had a bias, so I kept shorting
Yeah.
at key levels, which wasn't smart because the trend showed that everything was going up. But in my bias, because still to this day, I still see no reason for the market to go up. But like you said, during a bearish time, there's always going to be rallies like this where things just kind of skyrocket. And I feel like it's kind of a way to trick some of the retail investors to start buying back in and
Yeah.
buying stocks that have been beaten down for the past year or so, thinking that things are going to start skyrocketing up because everything's like supposedly at the bottom now.
Yeah.
And we really don't know if it's at the bottom or not. And we're not trying to be like pessimistic or anything like that, nor do we want to be like super optimistic. It's just you have to see what's going on. Like, is there a reason right now for the market to really skyrocket and go back into the green? I don't see anything yet. Do you see anything, Mo?
No, but I'll talk about this because I was not, I wouldn't say arguing, but I was speaking to someone on Twitter, and they own a platform that has bots, so for Discord and stuff. And
Okay.
what that showed me is when even I started trading, we don't have the knowledge of how things move. So I was having a conversation with someone on Twitter about how Gamma, Avena, and Charm work. And when you start trading, that's something that's never brought on. We're taught simple Greek, so delta, theta is what we're asked to focus on. One event led to this rally. The event was the FOMC minutes, where Powell basically talked about rates and everything. And the sentiment was that it was very dovish. Because of that, one simple thing triggered, which led to the rally, which is your nearest puts were closed. Okay.
Hmm.
Meaning people that had weekly puts, they closed them, and then they moved them to the next OPEX, which is June 17th, I believe. That's the
Yes.
next OPEX date. And because of the rolling and closing of the puts, we got the initial rally. Now, the way Gamma works is just closing puts doesn't do the work. You need to start buying calls too. So call buying needs to happen too. So then we saw call buying. I'll give you a stock, Amazon, 1 billion of stocks bought on so on Thursday. So this Thursday, and then
Hmm.
110 million on Friday, and 4.56 worth of weekly options came in for Amazon. That's just one example. So that combined is a deadly combination. So as the rally kept going up, what else we saw was those June OPEX rollouts got rolled even further into July 15th now.
The
And
puts.
yeah, so what
Yeah.
they're doing is every pump, they're adding more puts. So just so you know, on Friday after hours, we had another 20 million puts bought after hours. Again, for July 15th. They're buying it on SPY, SPX, and QQQ. This is the nature of how the cycle works. Plus, we had the monthly flows. So basically, rebalancing. JPM had a big rebalance that had to happen. So that also led, because this is end of month flows as well. This is the stuff that retail needs to learn. They have to learn this because if you just follow directional flow, this is the stuff that's going to basically blindside you, and you're not going to see this.
Correct, because you're going to start end up getting in some leaps, the call
Yeah.
options for leaps, thinking that the market is done, and then you'll be happy for a couple of days, maybe even a couple of weeks. But if you're not paying attention, if you, for example, don't have a stop limit put in place, and the market does start tanking again, all your profits going to disappear overnight. So you
Yes.
have to still, right now, be very cautious. It's just putting it out there, be very cautious because again, We don't really know if this is over or not. I'm not seeing any clear indication, at least on the economic aspect of things, to show that we're going to go up. But like you said, it was the FOMC talk that happened, and the was it the 2 minute point? Is that what they call it?
The FOMC minutes.
The minutes, yeah. So
Yeah.
the minutes were released, and again, correct me if I'm wrong. Those minutes were from last month, though.
Yeah.
So they weren't even like current.
There,
So it was from last month.
nothing new ever comes out of these minutes ever. But these are like talking points that they've talked about, maybe new addition. It's mostly a recap from last month, but then they add new stuff. Very rarely they do that. I don't think Pablo is purposely trying to shock the market. So I didn't think anything crazy was going to happen. But like one simple fact that everyone has to understand is for a market to go up, stocks don't need to be bought, calls don't need to be bought. If puts are being closed, puts are being rolled. That will also cause a little bit of squeeze. When that happen, after that, people start buying call, which causes the rally. The problem here is a lot of us are subscribed to these retail flow services and they watch net premium. Net premium is plus minus what's the total premium, right? Your net premium could be negative, meaning we have higher bets on the put side. The market could still rally. And that's just because the puts are being closed and moved on to further strike price. It's a little bit more complicated topic. Like you can't understand this in 5 to 10 minutes. The important is just understand that there's more powers outside than just simple directional buying that causes the market to go up.
This would be a good question I would ask you. Is there any specific resource that you recommend people check out to try to get informed on this process?
Yeah, you could start by studying Greeks. I think the basic ones, delta, theta, everyone understands.
Everyone knows that one. Yeah, that's
right?
the basic, right? But there's more to it.
Then you can Google it. Like, what is gamma? How does it get triggered? What's vena? How does that get triggered? What's vena and charm? How do they both work together? Once you have the full picture, it's just easier to understand and you get it. Okay, this is what's happening. I don't want to keep going against flow, but a lot of times people are like, oh, look, another $2.1 million put. You don't know if it's being bought, sold, rolled. So unless you have the full picture, you don't know what's going on. Then people look at OM volume, not understanding that it does not get updated live, not with the tools that we have. There's other ways to figure it out, but you like when you're on your brokerage and you're looking at OI, it's not getting updated live.
Yeah. Now, because of everything that you're seeing right now, have you? Because I know again, like you're not really a long-term investor. You do have some stuff that you have been buying. Did you buy anything last week at all?
Yeah, I bought 2 weeks ago. I bought Net Stocks, NET, ticker symbol.
Okay.
It's cybersecurity. I think they go up. I don't mind buying at 55. I missed SE, ticker symbol SE, but I think there'll be more opportunity. But I would be comfortable starting to add now to the companies that I like. Now, Apple was at 136. I think we're at 140. My buying price for Apple is 126 and then 116. Those are my 2 buying points. Tesla is 500 and 350. I know a lot of people might think I'm crazy, but these are my price points. When I said other things were going to go down, people didn't believe it. Do you remember we came on this call when we started the podcast and said Tesla's going to 500? This is like, what, 2 months ago? And now Tesla's already sliding. And then Ethereum.
And then it jumped back up though.
Yeah.
That's unfortunate. Like it did. It went all the way down as low as I believe it was almost $600, and then it jumped right back up.
Yeah.
So now people are saying, "Oh, you're wrong." It's like, well, again, we don't know if this is the bottom yet because
We're not done
like
yet.
correct. And like it works. Like even in the futures market, you can't just completely have a straight down drop for weeks on end. You have to have these rallies to pump up to get liquidity to drop it even further. So there's certain key levels that you do have to reach before you really get the sentiment that maybe it might be a bullish market. I haven't looked at the SPX levels yet, or even the ES. I mostly do NASDAQ. So I just know that just from history of being in the futures market, again, I haven't been in there that long, 2 years. The trend typically is it will go up to get liquidity, and then it will just automatically drop further down. So don't get caught up in that whole hype of the recession is over. because I don't think, at least I don't think it will be. And you've been calling it, man, since November. I think is in your group in OTB Clubhouse. You said
Yeah,
back in November, I think you told me, dude, stop buying stocks right now. And I didn't listen. I kept buying. So,
it's
but
okay. Like,
yeah.
I look, man, I've been privileged to learn about the stuff that I'm talking about that most people don't. And it's not like the shit I'm talking about is like magical. It's not. It's just like anything. It's like learning about delta and theta. It's just that's what's taught. The other stuff isn't. So you have to do a little bit more of digging. And then once you have more information, it's an edge. Even if you have 1% more edge than other person, that's a big thing long term. So you've got some really, really big red flags. You've got the market rallying, but then look on the other hand, what's happening. Long weekends used to be the best time to trade crypto. Go
Hmm.
pull Ethereum right now. I'm looking at the chart. It's freaking at 1738, right?
Oh, it dropped again.
Yeah. So that's telling you that people are risk off. I'm telling you, the way Ethereum's going, we do see 3 digits on it, which is, I think, my levels that I had was, let me check. 1 second. I think I had 700 something on this.
Yeah, I think that's what you told me was 700. Um, I thought about maybe selling out of all my crypto. I don't own a lot. I only have maybe around $2,400 in crypto because I don't understand it. I'm quite frankly not interested in understanding it. I know people are saying, "Oh, it's the future," the technology. But a pure example and the reason why I'm not putting a lot of money into crypto is with Luna. Did you hear about Luna? Luna
Yeah.
literally went to zero, and everyone thought that since it was a UST, a stable coin, right, that
Yeah.
you're safe. It's safe. It can't go wrong. Like you could put your money in there. It's as safe as a savings account. And man, were people wrong. So that's the reason why I'm very iffy about crypto. Yes, I have Bitcoin. So I invested a majority, I would say 80% of it is in Bitcoin. And then the rest is in Ethereum with a little bit scattered in ADA and Solano. But I'm not taking it out. I'm just going to leave it. If it goes to zero, it is what it is. Because the last time I invested in crypto was during the height when Bitcoin was at 1700, 1800. That's when I first bought. And then it crashed all the way to 3,000. And I just kind of held on to it for many years. And I sold it once I got into the stock market. And then
Yeah.
4 or 5 months later, everything rallied. And I was like, man, had I just left it, I would have been okay. So I'm just leaving it. It's money that I don't need. I don't know how other people may feel right now, because I've heard you're not the first person who's been saying that it's going to get worse, and it's looking like it's going to get worse.
Dude, it hasn't started yet. Quantitative tightening doesn't even start till next month, which is now, and on Tuesday or Wednesday, sorry, it starts, which means Feds start shrinking their balance sheet. That's when you're going to have real liquidity issues. I don't know how high SPX go, but I showed you guys the SPX bottom on Bollinger Band 2 weeks ago.
Mm-hmm.
And like, we're showing you literally how to do it, like on record. Like, it's simple. There's no like magic to it. It's at the bottom, it's oversold, and on a long term, on an index, go back 20 years, the candle never goes out. It always goes back in, and that's from where you get the bounce. So if you go back to the chart now, we're almost near to the top of the um, Bollinger Band, which will put you on overbought, which will put you on supply on a 1 day. So that's telling you there's a pullback coming. I think we get a pullback on Tuesday or max Wednesday. Not saying we don't get another rally after that, but you got some key levels. You got 4,200 next, 4,250 next, and 4,300 next. That's where I think those are the three. I don't think we go higher, but again, I'm a trader. We go level to level. There's zero bias. If there
Yeah.
is bias, that's the cause for you to stop trading that day.
Yep. And I'm more on the investor side, and I'm still saying don't buy anything. I did not buy anything last week at all. I actually sold out of my Roblox positions. I have two portfolios. Both of them have Roblox in it. One of them I got in the 30s, so that's the one that I sold out of. The other
Yeah.
one I bought way too high. I just have to suck it up and just hold on to it. I still think that Roblox has a future, looking into the company, but Morgan Stanley, this is, I guess, if you want to talk about like a hot topic right now, real quick, Morgan Stanley warns that Roblox could plunge all the way to $15. And there was some
Yeah.
other articles that was coming out saying that was it on Seeking Alpha. They were saying that the metaverse play Roblox saw its stock hit the 52-week low last week, and that it's potentially still far out. The metaverse is still in the beginning stages. And a lot of people were betting a lot of money into Roblox and Facebook, I would say, because Facebook, said that it was going to become this metaverse stuff. Facebook still, in the end of the day, fundamentally is a social media platform that sells ads, right? They did put a lot of money into the metaverse for the future, but they're not there yet. Roblox is a video game. And if anything, if any sort of metaverse exists, Roblox to me is kind of like the one that's closest there. It's a platform where people can go in there and talk and play around. They don't have that whole metaverse, I guess, idea completely placed in there yet. But in the future, I think potentially Roblox could be the leading platform for the metaverse to start with, or it's going to get acquired by somebody, especially if it ends up dropping as low as like Morgan Stanley is saying, $15. But there's a lot of hurdles there with the Robux. Terrorists, drug lords have been using it for money laundering. So there's a few negative stories that are attached to Roblox. So we'll see what happens from there. But right now I'm still just stacking up cash. I'm not buying anything. Even Apple right now, I'm not going to buy any more shares until I feel like it's at the bottom, which could be anywhere from 130 to 120 is my levels that I have set.
Yeah. One of the things that I didn't know, and I learned that from a friend, is when an analyst does an upgrade and downgrade, one thing you want to know is the only way and only reason why they upgrade that certain ticker is because they either hold it or they trade it. So a lot of times they do this to manipulate. So maybe MS is looking to buy it at 15. So people can sell it to them, but that was something interesting. So they don't randomly grab a ticker and be like, here is an upgrade. It's mostly one of their holdings. I did not know that. So that's something interesting to know. If they're holding it, that's the only time they do a upgrade or a downgrade.
Yeah. So I'm kind of waiting. And again, I mean, Morgan Stanley, they have Roblox in their portfolio. I know that for a fact. But Roblox is also 67% down now. Some people see it as a sell opportunity. It has ran pretty crazy the past week. I'm talking about like 10% up, 12% up.
Yeah.
And then it also will drop 10 to 15% in a heartbeat. I think Roblox is a good trade. I was trading it for a while. Remember last year? I was doing pretty good with it. And then it just kind of collapsed. And then it went down to where it's at now. And I'm just keeping an eye on it still because I do, again, I like the stock. I like the company. And I like to trade it. And I like to buy it for long-term investments. I just need to see where it's going to go.
Yeah.
So, and that with that news, I expect to see Roblox drop on Tuesday when the market opens up. So that's my 2 cents. So as for the hot topic, that's pretty much the only one I have. Do you have anything that you want to talk about on the hot topic?
The only thing that I say is keep an eye out for GME. It's got earnings next week. And so
GameStop?
It can either take the market or tank the market. I'm looking to play AMC for GME. So
yeah, speaking of that again, I see some people telling others to buy those meme stocks as an investment. I mean, do what you got to do. My personal experience, I would completely stay away from it on an investing side of things. On the other hand, for trading, they have been really good for trading. I see a lot of people trading GameStop, AMC because they have such a huge volatility attached to it currently still. I just don't. Just be careful, man. That's all I'll say. If you want to buy, if you really think GameStop is worth $137 a share, go for it. Why you would think that, I don't know, but maybe you know something I don't. Same thing with AMC. Let me see where AMC is currently at. AMC is another stock that I have bought at $2 a share, and I wish I had bought more. It was as a joke with a friend, and we bought 50 shares each, and we sold it at it's back to where it is, $14. I still don't think it should be worth more than $2, maybe $4, in my opinion. So we'll see what happens from there. All right, Mo, do you want me to switch over and pull up the charts for Apple?
Yeah, sure.
Yeah, I'm gonna do I'm gonna cover Apple real quick, and then Mo's gonna cover his topic on a trade idea that he has. So pulling up the chart right now. This is Apple. Right now, it obviously has run like crazy for the past 3 days. It's been down for a while, and it's been nothing. I mean, literally, the trend's been going down ever since, what was it, March 29th. It's been downward trend ever since. The bottom looks like it reached at 132. That was one of the levels that we talked about in one of the previous episodes, that there was a demand at 130 and then 120. It looks like it actually hit it at the 130 range. Obviously, it was 132. It didn't hit exactly 130, but 132, and then it kind of bounced back up, and it's been going up since. The new demand zone that I have here is between 137 and 140. But seeing that it's been running for the past couple of days, depending on what SPX is going to do and the ES, I see it struggling here at the 150, because remember, that was also a demand zone at one point. It's also a support and resistant line. So right now that is a resistant line. I need to see it actually close above 150 for me to see it go up to 160. Because SPX is currently at what, about to be at 4157 is SPX. What was your next level for SPX? 4200, right?
4200 will be key, and then 4250, and then 4300.
Yeah, so you have to see if SPX can reach above 4200, and then obviously Apple will go with it. If it doesn't, obviously Apple will then likely tank with it. But that's my levels for Apple. If there's any other tickers that you guys are ever interested in for like demand zone, demand supply zones, hit us up. We can cover it on this channel. I know Apple is a popular one. Everyone likes Apple. A lot of people are invested in Apple. That's the only reason why I brought it up. So the 150 is really a key level to look out for. And again, look at SPX as well. If we get up at 4200, Apple will likely run. If it cannot, Apple will likely go down. And the new demand zone, like I said, I'll say it one more time, is I'm seeing 140 to 137 is a new demand zone that was created on the daily. All right, let me go stop sharing, and I can go back to us talking. So what's your thoughts on the whole Apple and SPX?
I love it. I love it, man. A lot of people ask us how we trade SPX, and one of the things I do is I look at the top holdings, the top 5, see what kind of flow they're getting, and Apple has been getting bullish flow. So they've been hitting 140 for next month. So in the money calls, yeah.
Oh, in the money calls. Okay. Yeah. Do you want to talk about that real quick? I know some people are wondering, why are institutions buying in the money calls instead of out of the money calls?
Usually there's 2 reasons why you would do in the money. One is the obvious one. It's safer. The premiums moved. Delta's bigger because, you're in the money. So there's not much risk with theta, because theta is the biggest factor why premiums lose. As long as the stock's going up, that's the big part. As long as the stock's going up, it's safe, and liquidity is good because you're bringing in 4 or 5 million. You want to go in the money. The second reason why most people don't know people do it is to buy stocks. So let's say you have 100K and you're like, I don't want to put all 100K in the market, but I'm pretty sure the market has reversed. So what you do is you buy 10K worth of Apple leaps in the money. And so when, let's say, the stock goes, right now Apple is at 144, 145, you buy a 140 leap for next year. Next year Apple's at 200. What you do is you just exercise it at 140, and then you own the shares. Does that make sense? And it's a perfect thing to do in a recession where it's ending. So you could basically leverage options to buy stocks. So you basically, and then you have to, in order to exercise, you need to bring the money. So that's important. But it's a way to be risk off in a way. So you only betting in less money, but know that if it goes against you, you're going to lose a lot.
It's good, yeah. And I'm going to cover this in one of our episodes here in the future, because I'm actually learning something right now about like cover calls, synthetic cover calls.
Yeah.
And part of that is I noticed that there was a lot of open interest, I believe, or volume at the 55 call for Apple in 2024. Maybe it was 150. But regardless, I started doing some research and I was testing it out to see why would people buy so deep in the money.
Yeah.
And it's because of like what you said, but also the people are able to do synthetic calls afterwards, cover calls. And I will cover that in the future when I'm actually smart on it. It's just something that I'm learning right now. And I was just looking at the premiums in general. Like, had you bought the 50 call for 2024 in Apple, it cost you about $9,000 to buy that one contract. So yeah, that's a lot of money. So you have to understand it's deep in the money, so you're going to be spending a lot. But I noticed that call ended up going to 14K, and now it's actually right back at between 8 and 9K right now. So if you think about that, this is like back in the days, almost like a year ago, where you could have bought Apple 55 or 50 call and it was 9K, and now it's right back to 9K. So you had all this room where you could have taken profit during that time, but it wasn't as volatile had you gotten like out of the money, because then you would have definitely gotten eaten up. Your portfolio would have been down quite a bit, or your position would have been down quite a bit due to the way the market has been moving. So we're going to switch over now to your chart, Mo. I'm going to pull it up here right now. And again, if you guys haven't followed us yet on YouTube, make sure you check us out, Money Market Truths on YouTube. If you're listening to this on Spotify and stuff, this is where you can see the visual portion of stuff. We bring up charts, we talk about these stocks, and we show you exactly what we're doing. So if you want to see that, make sure you go onto YouTube at Money Market Truths. All right, let me go make a full screen.
All right, guys.
There you go.
This is my first time doing it with you guys. So basically what we're looking for is trading AMC using supply and demand. And the reason for that is GME earnings. And we know AMC moves with GME. So I've drawn these resistance, and these are basically supply zones. And in short, supply zones basically tracks if there's any sell orders in that area. And at this price, sellers have taken control in the past and rejected it. So we've got 1443 as one of the cases. I think we opened below that on Tuesday, and I'm looking to get into AMC below that. On the break of that. And the call that I'm looking at is 15. The next levels that I have is, let me just show you guys how I draw it. So you guys see at this level, there is a rejection. So this now becomes a supply zone. So these are going to be the levels I'm watching, 1488 and 1575. I'm looking at a $15 call for AMC. Now, I gave you guys the upside. What's the downside? The downside is this level right here. This is going to act as support, 1414. So if I was to make this trade on an upside, I would either take it on the break of this 1450 or on the bounce of 1414. I will not take this trade anywhere in the middle. And that's why execution is important in terms of knowing what levels to enter, what levels to not. So it's in front of you right here. So these are our levels. GME, on the other hand, let me show you the chart, because you need to study GME if you're going to play on it, because most of the flow will be for GME. And that's what we have to say. Even though you're playing AMC, you need to know how the chart of GME looks like and what the flow will be, which you can check on Tuesday. So let's look at 1 hour. So this was your support. We broke that. The next supply, I'm going to zoom in so you guys can see it. It's a 1 hour chart. This is your supply right here. And then you have, I'm going to turn off the extended hours here for a second. So now I'm going to reset the chart so we can see where we're at. These are your levels. We've broken the level, so that's really bullish. Essentially on a 1 hour, there is no other supply till 145. 145 breaks, you get 150, but that's literally how simple my trading is. Sometimes this is all I use to trade. So this is a very beautiful chart. You take it, I'm going to switch to 5 minutes. You take it either on the bounce of 1440 or the break of 1450. Yeah, that's it for me, Mark. And
Well,
then,
let me ask you this question real quick, Mo. Like you said 1414, right? So let's say you get into position at 1414, right? And it drops below $14. You would exit, correct?
yes.
All right. So I know I get a lot of questions. People are like, well, when do I exit if it goes against me?
See, a lot of things depend for me, Mark. Like an obvious answer, if it goes under 14, I'll sell it. Yeah, but I tell you this right now, if we get the flow on AMC and it goes to 14, the premium won't drop. Okay. And if that happens, I'm not exiting it. And that's what with these tickers, you have to like AMC, GME, DWAC, like all these meme stocks, different rules apply. You can't play this like Apple. That makes sense. You have to be a
Yes.
little bit more, have a little bit more risk tolerance when you get in, which means you have to size yourself a little much smaller.
Yep. And take profit quickly.
Yeah.
Quickly. Do not, would you recommend holding it overnight?
Anything that you hold overnight in this market is a lotto, unless it's free, which is basically what does free mean? Selling half on 100%, taking your cost back. Still not free because that's still your money. You could have taken it, but that's kind of how I want to put it.
Yeah. Okay. Yeah, I just want to touch that. So again, guys, if y'all ever have any other suggestions or things that you want to learn about, please just hit us up on Money Market Truths on Instagram or on Twitter, or you could even hit us up on our personal page. Mo's is OTB Clubhouse. Mine is Trading with a Dummy. And we're just trying to, just inform you guys on the market, what's going on, and kind of give you some ideas on what we're looking at. Again, I'm more of an investor. Mo is more of a trader. Now, again, I do trade on futures more than anything. I do occasionally trade on options, but Mo is literally, that's like what he does for a living. He trades options. I like to invest because it's just easier for me to buy, leave, and just not really look back. You do have to have a stomach, though, for it, regardless, because right now we're in a bearish market. People will tell you right now on YouTube, start buying, start buying, start buying. Just know, have your risk tolerance. Do what you feel best for you. Just understand we're all people who are in the market. We're all learning at the same time, and knowledge is power. So the more you know, the better you can execute. Point blank, period. So again, y'all, my name is Mark. You can find me on Trading with a Dummy. This is Mo. You can find him on OTB Clubhouse on Instagram, as well as Money Market Truth. We both monitor those on Twitter as well as on Instagram. If you ever have any questions or you think something that we can improve on, please, by all means, shoot us a message, because we want to improve. We want to provide value, and hopefully we are doing that here. Again, just be careful out there. There's a lot of tools out there that can help you on the trading side as well as the investing side. One of them is the tools known as a journal. Just journal your stuff. Basic Excel spreadsheet if you need to. Just journal every single one of your trades, whether it's investing or if it's during your process of trying to build wealth. Do you have anything else you want to add, Mo?
No, that'd be all, man. Stay safe, like you said.
Yeah. And again, everyone, please, please, please subscribe. We see that people are watching, but the subscriber is pretty low. So make sure you smash that subscribe button. It helps us out. Smash that like button. And of course, click that bell to get notified every single time we drop a podcast. We're also on Spotify, Apple, and all the other podcast platforms out there. So listen in if you can't see the visual. Again, my name is Mark, and this is
Well, take care.
Yep. Take care, everyone.